Welcome to Sugar Mama's Fireplay, the podcast where we spark your financial independence, fuel your early retirement dreams, and empower you to build long-term sustainable wealth. I am your host, Canna Campbell, financial planner and a passionate advocate for financial freedom. Whether you're starting your journey or refining your strategy, this is the podcast that will inspire you, educate you, and guide you towards a life of choice, security, and abundance. Let's get started. So today we're going to be diving into an incredibly important topic: mortgages and relationships. Buying a home together or even an investment property together is a major financial decision and obviously comes with a lot of emotional commitment. So if you are planning on taking out a mortgage with your partner, it is essential to have clear and open conversations before you sign on the dotted line. Now, today, I am thrilled to be joined by Adam McCabe, my own personal mortgage broker from Blue Lantern. And he's going to help us break down the key questions that every couple should discuss before buying a home or an investment property together. By addressing these crucial topics upfront in advance, you can set clear boundaries, reduce financial risk, and create a secure, stress-free future for yourselves to enjoy together. Adam, good morning and thanks for coming in again. I always love it when you come in.
Me too. Thanks for having me again.
And I should also point out, you were actually the mortgage broker that helped me when I became a single mother. Obviously, we go really far back,
Way
but
back.
I remember calling you going, Adam, I need your help getting divorced and I need to buy this property out. And you stepped in, like swooped in and helped me. So, this is really quite appropriate that you're here with me talking about the key questions. So, Adam, you have a huge amount of experience, 20-something years of experience being a mortgage broker. 22. And you have obviously dealt with lots of couples, and I'm sure I wouldn't be the only person that you've dealt with that was going through a divorce or a separation where it meant, having to rejig the finances or reapply for home loans and mortgages and investment loans. You've seen all different situations and scenarios, but I'm interested to hear from you, what are the key conversations that couples need to be having, ideally before they go and make a major financial decision and obviously take out one of the biggest financial responsibilities together? And I also want to make sure we apply this to people who maybe have already gone and bought the property or bought the investment property, making sure that they're aware of these conversations so that they haven't had them yet, they can start to quickly have them now. Where do you start? What are the key things we need to be chatting about as a couple?
Look, you're totally right. And, over the years, I've had so many experiences through those issues, more than I could remember. But what I've tried to do is break it down into 3 categories.
Yep.
So we're looking at categories of questions to avoid conflicts, questions to lead a comfortable lifestyle, and then questions for financial security in retirement.
Brilliant. Okay, I like the sound of this. All right, so let's get started.
The first question we have is, what are our individual financial goals? That's really important because each couple, they need to discuss and understand what each other's financial goals are, whether it be short-term, medium-term, long-term, to avoid any misunderstandings and to be working together on that common goal.
So can you give me some examples?
Well, it would be, for example, if you're entering the property market for the first time.
Like a first home buyer.
First home buyer, or is it an investor? What's important? What are their long-term goals? Can they afford to buy their forever home now? And are they both in line with that? Or would they prefer to enter the market with lower risk in terms of a lower mortgage that you can then upscale over the years and end up in your forever home? So what does that look like? Do you both want to get there now, or are you happy to wait?
So is this a stepping stone to help us get our foot in the door in the market? And we see this, we're looking at selling this in, a couple of years' time to then upgrade the home and buy a bigger one and take on potentially more debt with, more income? Or is it something that we're going to stay put in the meantime?
Correct. And those are the options. There's also the option, obviously, of rent vesting, which is becoming much more common these days as well. And that might be your stepping stone into that ideal family home, by paying down the investment of a lower price, getting some appreciation in value, and then selling for the profit, scaling that up. That's your stepping stone into your home. I'd say they're the main factors that we're looking at here.
So the key thing is to think about what are your short-term, medium-term and long-term goals in relation to that particular property. And, of course, never assume anything, I think.
No, and, you can do that, obviously, for each transaction. But when you're starting that first purchase, you need to align, and you need to align early. Otherwise, you start the process. You can be at auctions, you can be at online shopping, and if you're not aligned and working together, there'll be disagreements, misunderstandings,
conflict,
which could cause you to pull out of the transaction altogether. Then it's a missed opportunity in 2-3 years' time. So it's all really important to get that, and that's why this is our first point. Align your goals early on.
And I should also point out, for couples that are listening to this that have already bought that property or recently bought a property, have these conversations now. It's not too late.
No, the sooner the better.
All right, what about next, especially when it comes to things like expenses and budgets and savings?
Yeah. Absolutely. So the second one we're looking at here is how we handle joint expenses and savings. Now, that's really important because if you're sharing financial responsibilities, you need to then map out how you're going to manage that. And, we've got so much technology behind us these days to help manage that. You could look at options of, should you have a joint account where you're managing all of your expenses jointly? You could look at having a separate type of service account where both contribute a proportion of your income to manage the direct debits that are due to come out and loan repayments. So they're the two types of setups that I'd look at that you want to ask yourself which one is best suited to you.
And I guess, not everyone earns the same income. I think it's quite rare to come across a couple that earn the same salary.
Definitely.
So having the conversations about, whether it's a percentage, is that the best way of running things where it's fair and equitable and both parties obviously agree? Or, there's so many different dynamics that sort of come into this.
There are. And, there are opportunities, and I see a lot of this where, will be for one partner to have the larger or main income, and that goes towards managing all of your expenses, direct debits. The smaller income is the savings, because it's important to have a savings plan as well as managing all your existing commitments. So getting together and aligning your vision on how you would manage that on a month-to-month basis is really important.
I have read quite a few blogs where couples have explained how they manage money, and the one that I think is most popular and the couples seem really happy and united is where they have done exactly that. One person's income goes towards the mortgage and then they live off the other person's income together. And I have to say, for us in our home, Tom's income covers the mortgage and then we use my income, to live off for the family expenses. And it makes you feel more like a team. It's none of this, I earn 30% of what you're earning, so we'll split the expenses 30-70. Like it can get very messy and
unproductive.
And
those
ugly.
Types of conversations.
Yeah, exactly. Yeah. And it is uncomfortable.
It's also really important to get a grasp on that early on, because what I see is a common error is you've got all these direct debits set up, and if you're not aligned and working together on how to manage those, and you should have this set up to be automated transfers to separate accounts to manage those direct debits. That's my advice, because if you don't, what we do see is your account being overdrawn when direct debits come out that you haven't planned for.
And that's when you get that really awkward situation at the supermarket and your card gets declined. It bounces. Yeah.
Or not just that, your account gets overdrawn. These little things impact your credit file. So you really need to be on top of that. You can manage it easily by having automated transfers to manage those direct debits. And then, as we say, starting that early as a couple, agreeing on that, then you'll avoid those types of issues.
And we should also point out, having equal access to those accounts, having that transparency, be able to have the login details, attached direct debit cards, obviously respecting each other and your boundaries with managing those accounts is essential.
I've spoken to clients who, one of them, customers hasn't had access to online banking for those accounts. They just leave it to the other person. And look, it's really important.
Which is a form of financial abuse.
Well, it's more, it's more, I wouldn't say ignorance, but it's probably just more...
that person didn't actually want access?
Yeah. The money might be managed by one of them, and that's fine, but you should still have access and visibility. It's not that they didn't have permission for access. They were just lazy in registering, setting up passwords.
Oh, okay.
And getting online.
Because I have seen the other side where they're actually blocked. They refuse to give them access.
No, that's terrible.
Horrific. What else? Particularly when it comes to things like, deposits towards the purchase. I mean, again, these are conversations that can be really awkward and uncomfortable to have initially.
They are. And sometimes, if it's early on in a relationship where you're taking that step of buying a property together, whether everyone's providing full information, they want to keep a little bit of money on the side as their security buffer. While there's nothing wrong with that, I would encourage being fully transparent, talking about exactly what you've got. It's really important to ensure that when you're buying a property that you're leaving yourself a really good buffer. When I say buffer, we're talking 3 months worth of mortgage repayments, I would think, as a minimum, because if you put all your eggs into one basket and after you've purchased that property there's not much left over, it's going to be a tough few months.
And when things get hard, that's when you sort of realise the strength and possible weakness of a relationship.
Oh, definitely. The deposit size and contribution is also an important part. Is one partner putting in considerably more than the other? If it's an investment, should they look at ownership percentage? Get some tax advice on that. As a home, should they look at the percentage of ownership? I don't necessarily think that's a wise way for your own home. For investment, I do. But again, these are just conversations that you need to have in terms of who's contributing what to the purchase so that there's no conflicts moving forward.
And also there are situations where, one person may have been saving for a really long period of time, 5 years, for example, and the other partner has only recently started saving because, they weren't planning on buying a property, but they decided, okay, now we're going to buy something together. So they actually may have a capability to have the same size deposit, but they're not quite there yet as to what the other partner has been saving. So again, like these conversations are so important. You can't assume you're going to go in 50-50. It's going to be very fair and equitable. Nothing in life is fair and equitable. There are going to be all sorts of things that sort of come into play. You cannot assume anything, and these conversations are just essential.
No, and it's even just getting that awkward conversation out of the way before the purchase goes through. The last thing you want is to be aware of that at the back of your mind, and if you're both aware of it and then nothing is said, property purchase goes through, and then the discussions start happening, little digs about who put in how much and so on. So do that early on, upfront, before you take the step.
All right, what about actually the day-to-day budgeting, the mortgage repayment coming out, the expenses attached to maintaining a property, which a lot of people don't realise until they're in the thick of owning a property when things start to break or need to be replaced and upgraded?
This point's critical. So this one is, what is our budget for monthly mortgage repayments? So it's a combination. It's what can we afford for the monthly mortgage repayments? But to get to that point, you need to dig deep into your personal monthly living expenses. And when I say dig deep, I mean everything. Go through your credit card statements, your bank statements for the last 6 months and pick up every single expense, because I guarantee if you just go into an Excel spreadsheet or a budget tool and enter what you think is your budget, you have missed 20%
at least. Yeah. I completely agree with you. And this is why I always recommend people, especially with the Budget and Cash Flow Academy that I run, you have to check your transactions, because that is the truth and reality of how much you really spend. We all like to kid ourselves that we don't really spend that much money, and looking at the cold hard truth of actually you spend this much at Harris Farm and this much at Dish and this much at, the pub.
It's not just that. It's about the unknown or the forgotten expenses. And I find these all the time. I can go on Instagram and sign up for something that I totally forget about. And then all of a sudden, it's tax time. I'm going through all of my accounts and I see these direct debits I've totally forgotten about. So if you're doing a budget, the place to start is sifting through all of your bank statements, highlighting all your direct debits and expenses, and then categorising that into a budget so that you don't miss anything. Until you've done that, it's really pointless talking about what you can afford on a mortgage repayment.
Out of interest, do you recommend couples do this together or individually and then come together?
Together, but individually. If you're running your accounts separately, then obviously individually and then come together. But either way, you just need to make sure you get to the same finish line where you've both gone through all of those expenses and you holistically understand 100% of what your true budget is. All
right. What about when it comes to lifestyle? Because, everyone has a different value system. I might like beautiful handbags and Tom likes to spend money on golf lessons and golf equipment and buying lots of balls that he's lost, which can be expensive. Like you, like me, are in the thick of relationships and money and helping people. Obviously, I'm more of the financial planning side. You're more the borrowing money side. What are your bits of advice, and then what are the key questions?
Well, handbags and golf are both very expensive.
Well, hang on, depends where you shop.
Look, this is a really important piece because, I speak to so many people who come and see me and they say, look, we want to get a pre-approval, we want to buy a family home. And then after that conversation, they'll go away and they start looking online. And then all of a sudden they see the dream home without really understanding what the price will be, because obviously you get misled by real estate agents in a price guide.
I always say add 20%.
Probably. You also don't understand what the mortgage repayment will be yet. So then you're putting the cart before the horse. You've pushing yourself into a family home without understanding what it's going to cost you and how that leaves your lifestyle. It's really important not to compromise on the lifestyle. You don't have to be excessive, but you have a lifestyle that you expect and need. It's important to get that right before you're going and buying.
Nothing worse than, taking out a huge mortgage and then realising actually we can't afford that. We're going to have to take and make major cutbacks.
Absolutely.
In, the way that we spend money. And
that links up to our last point, the budget. So getting your budget right, framing what your lifestyle will be moving forward so that the decisions you make in terms of taking out a mortgage and buying a property fit in with that lifestyle that you've come to expect.
Okay, what about when you're actually looking for properties? As you said, the couple that quickly jump online together, they're excited, like they're starting to go and maybe, make some phone calls to real estate agents. They're hitting the pavement on a Saturday morning doing open inspections. What are the key questions you recommend the couples have around picking their home and even the area that they want to live in?
Yeah, so this one's about what kind of home and what neighbourhood best suits you. And this is important because, stamp duty is a very expensive add-on when you're buying property. So you do not want to pay it twice. Unfortunately, I've had some clients over the years who have made wrong decisions and regretted where they bought and could not stay, had to move. So they paid stamp duty twice in a very short period of time.
Wow.
So look, discussing what your preferences are is really important there. The type of home that you're looking for, also understanding what the type of home you need to factor in what type of work that requires. Is it a home?
Is it a flipper? Is it a renovator's delight?
Well, even just on a maintenance perspective, building and pest inspections play a part in that to see if there's any major work required. But also the neighbourhood, who the neighbours are, what it's like late of a night time. Do your research. Go for a drive. Go for a drive early mornings, midday, late evenings. See if it's really going to suit what you're looking for.
And also things like, checking out the amenities, like how close are you to public transport, what parks are available. Also for families, like what's the catchment like? Does the school meet your requirements for your local area? Because, that can be really tricky as well.
No, there's a lot.
And of course, things like parking. There might not be necessarily a garage or a carport. Is there heaps of on-street parking that's, not restricted? And what about when guests come to visit? Can they park there as well? And even like there's the cosmetic things like, like the light. The sunlight, is there morning light?
What's the aspect?
Yeah.
What are the neighbouring properties? Will they take all the sun?
What also DAs have been submitted with the council what potentially may impact the value of your home? Yeah.
Streetscape, safety for kids on the street, neighbourhood, all those things.
Gosh, there is so much to discuss and consider.
Units require that as much as houses. I think misconception is that that's more relative for a standalone home, but units are very important. It's harder to do as much research because you don't know who's living below you and on top of you if you're in a unit or next to you, but still do as much research as you can on that so that you're comfortable with the purchase and have no regrets. All
right, next question is what happens if they plan, this couple that are looking at buying a property together, or maybe even just bought the property together, and they have a change in income? For example, someone, is let off at work, or someone decides to take a bit of a career path and needs to go to university for a couple of years, or do an MBA, or, starting a family, all these big things that can impact your income and your earning capability as well, or even just having to take a step back because work isn't going as well as it previously had.
Work can be stressful. We've seen a lot of that recently. But this one we're talking about being prepared for potential changes in income or expenses, and that plays a role in what we talked about earlier with your budget and your savings and having a buffer of 3 months of mortgage repayments as well. Because it's very hard to plan for the unexpected.
Oh, yeah.
But it's why it's important to try and contribute to savings ongoing or to paying off extra in your home loan so that you do have a buffer.
Of course, using the offset account or a redraw facility.
Because you've got job loss, increased expenses, babies.
Daycare,
all of it. Insurances is a really important one as well, particularly once you buy for the first time. If you're on two incomes, and you can talk about this more than I can, Kenna, but if there's a main income earner who suffers a loss of income, or whether that's through injury or something worse, then are you covered to manage your mortgage?
It is so incredibly important. And I only actually got a DM the other day on Instagram from someone who had someone very, very close to them pass away and has left a very, very young family with a mortgage, minimal savings. And the parent is now going to be sort of left on their own fighting for their financial freedom and independence. And there's no insurance taken out.
How awful.
And, these conversations, not until things get serious, it's too late then. You can't go and retrospectively take out an insurance policy. No. So, and it brings me to a question like working out, okay, well, do you cross-insure? Do I take out a life insurance on my partner in that event, or do we structure it through our superannuation? And again, these are conversations you have with a financial planner, but you've got to have the conversations in the first place. Making sure that both of you have income protection in place so that if one person gets sick and can't work, they've got an income protection policy that pays them up to 75% of their income, and that other partner isn't left having to try to cover the entire mortgage repayment and the living expenses on their own sole income. These conversations I think are just actually not being had enough.
No, and particularly if the one who is left working and is the one left to manage everything based on their salary, if that was never enough to cover half the mortgage anyway, then that's a really, really big hole. And something that you just need to act on straight away. So they would probably be stuck with no option but to sell.
Yeah. I mean, it's a financial crisis.
Yeah,
and,
absolutely.
Hopefully one that I'll be able to talk about in more detail soon. But you're right, having the conversations about insurance, how are we protecting our home, how are we protecting our financial responsibilities, how are we making sure that we can stay on track with all of our goals and dreams. So
family, for the kids, for their education.
I mean, it's another episode in itself. It's a non-negotiable as well. And a lot of people, I think, don't think about these things until you make a big financial decision. But in fact, you can take out all those insurances much, much earlier in life.
You can. And then it's just about adjusting the insurance. If you do make a big purchase and your debt increases significantly, then obviously you just amend your insurance cover.
Can we quickly just touch on, and I want to almost do another episode with you on this, but couples of family. And I get asked this all the time. How do I, plan and prepare financially for having a baby? And it's often a female asking me, but it's equal responsibility. What is your advice to start having that conversation with your partner about how do we see the mortgage being handled if one person takes a year off work to have a baby, or how are we going to handle the daycare expenses, or, how do you recommend having that conversation? I mean, you're a dad, you've got 2 young kids yourself.
Look, it's a really good point, and I probably see one scenario more than the other. So what I see is the upfront scenario where we're obtaining pre-approval for a family to buy a home together, and mum's pregnant, they're having a baby that will be coming before the purchase, and there are options for that on how to finance that. So basically we look at how much have you got in savings, what will the gap be between maternity leave and returning to work at some capacity. When returning to work at whatever that capacity is, what will your income be? And then we need to cover the gap between going back to work and the mat leave ending. What will the gap of that, what will your net income would have been as a salary? And do you have enough savings to cover that? If you do, then it's okay for the finance approval. That can get you approved to buy. So that's the first scenario. The second scenario is a bit harder, and probably not one that I'm involved in the conversations too much, to be quite honest with you. But look, at the end of the day, it comes down to, do you have savings? Before any changes in terms of mat leave or going on mat leave, speak to your broker, because we can look at changing your loan structure to help you get through that tight period. If it's 18 months, 2 years, that might be putting the loan on interest only for a short term to ease cash flow. Otherwise, you're leveraging savings. So that's why you need to be more prepared, be tight with your budget, and continually put away savings or pay extra off your home loan in anticipation of this big change coming up so that you can manage it.
And having those conversations as to how, as a couple, you're going to manage the mortgage repayments, the impact of superannuation, the living expenses, the new increased living expenses that come from having, a baby or another child in your life.
Nappies, wet wipes.
Oh, yeah. And doctor's appointments. It's incredible how quickly it adds up. But those, conversations are, how much time do we agree that's to take out of work, or is it something we'll take indefinitely? Is it a part-time scenario? How does that impact the mortgage? If one person's earning considerably less, how are you going to split the mortgage repayments? How are you going to split the living expenses? There's just so many different issues, and not issues, but just conversations that need to be had so that they don't become issues between the two of you.
Yeah, there's a lot of ground you need to cover to ensure that you've left no stone unturned in that situation.
All right, to wrap up this episode, I know you mentioned retirement, which is really interesting, because that's almost like, well, you'd hope that as one approaches retirement, their mortgage is paid off or being close to being paid off.
Look, the last one here is questions around financial security in retirement. And that can be, there's a few different ways that we look at that, but obviously that you want to have a clear plan and talk about how you will clear your mortgage before retirement. So an example of that would be, if you're 40 years of age and you decide to go and buy your forever home for your family, and in order to get the loan, you needed to take out a 30-year loan term or even 25-year loan. What's your retirement age? If you wanted to retire at 60, then you wouldn't be forecast to have paid your loan off for another 5 to 10 years based on that scenario. Look, don't get me wrong, families, once the kids get a bit older and out of school, their budget changes so they can pay the loan off faster. Hopefully you do some investments that can help you reduce your debt as well along the way. But you need to have a clear plan on that. That's what we call an exit strategy. Come retirement, if you haven't paid your loan off, will you have enough super that you'll be able to clear the loan?
And still live.
And still live there. And still have enough
For retirement. And to last.
Yeah. Obviously, the easiest solution to that is a downsizer solution, or moving, whether it be regionally or downsizing.
And these are the conversations couples have got to have. One person might think, God, I would never want to leave my home. I do not want to downsize. I do not want to live regionally. Or in fact, I want to go live overseas.
Yeah, you see couples living in a family home for a long time. They don't want to leave come retirement. That's where the kids grew up. They're emotionally attached to it.
That's where all their friends are, their network, their community.
If you haven't talked about this and how you would plan to tackle that, come retirement, it'll be a really big issue. The ways around it are looking at, obviously, if you need to take out a longer term to get the mortgage initially, you forward plan, okay? If you've only really got 20 years to pay it off so that you've got no debt come retirement, start making extra repayments. Talk to your broker or your bank about what minimum repayment you would need to make to stick to that targeted 20-year term. That's not hard to do. That's very easy. It's just about being disciplined and making those payments month by month, week by week, whatever it is that your preferences are.
And the thing with this is these conversations are just conversations. You're not setting anything in stone, but you're, as you have these conversations and explore where the conversations go, you're learning so much about yourself, and you're also learning so much about your partner and about your partner's value systems and what their dreams are, what their goals are, and even like what their money mindset looks like. And if you stop and actually really listen to what each other are saying, and obviously in a safe, respectable place. So much goodness can really come from having these powerful conversations, as awkward as they may be initially as you get started.
Yeah, definitely. No one wants to forego, a certain lifestyle that they might have that they're accustomed to. And that might be because, within the relationship, one's a spender, one's a saver. But if you talk about the potential conflict or the potential issues that you'll have come retirement with this big mortgage and plan for that early, you're getting way ahead of it.
And also, when you are on the same page by having those conversations, you're so much more powerful in making a serious dent in your mortgage, in that bringing it down so much faster and being so much more proactive, and in building up the right amount of emergency savings in the offset account or redraw facility, and seeing potential opportunities to maybe upgrade or, to accumulate wealth, even debt recycling and things like that,
Well, the conversation creates the hypothetical. Okay, when we get to retirement, the option is, if we change our behaviour and our spending now and try and pay our loan off as soon as possible, we'll be here until we really want to retire and, live in a small property that doesn't have much upkeep. But the hypothetical, if you change that behaviour and start paying it off extra early so that it's clear come retirement, then you know that that's a much better outcome for you long term.
Exactly. And as I said, nothing's set in stone. These are conversations to get you going and to think about, as you said, to do the hypothetical. And, as your life evolves and your financial situation improves, you can make the necessary changes, get professional advice along the way that is only going to benefit you even further. Look, Adam, thank you so much for creating a safe space where we could have these conversations, because I know it is a very awkward one and a lot of people don't know how to do this and how to get started. So thank you for coming on the show and allowing me to ask you questions on this particular topic. A quick shout out for you, for anyone that needs help with buying their home. Couples or even obviously single people, how's the best place to get in contact with you?
Yeah, the best way would just be send me an email, adam@bluelantern.com.au, or give me a call.
Let me help you out by putting how about your direct contact details, including your Instagram account, of course, your email address and your phone number in the podcast notes for everyone to be able to reach out directly to Adam. And as you guys know, Adam is my own personal mortgage broker. He does Tom's and my loans, and he does family friends, he's the only person I feel comfortable recommending, and I get zero benefit in doing that. So all I get is the comfort knowing that you're in brilliant hands, whether it be Adam, Joe, or John. So for everyone who's listened to today's episode, thank you so much. As you know, mortgages are one of the biggest financial commitments that we will ever make in our lives, and having these open, honest conversations together before taking the plunge, or as ideally if you've already taken the plunge, have them as soon as possible, can truly make or break a couple's financial future. I say that from professional experience as well as personal experience as well. So that is it for today's episode on Sugar Mama's Fire Play. I really hope that, as always, you're feeling inspired, you're feeling empowered, and you're ready to take control of your financial future and build that financial independence. If you have enjoyed today's episode, can you please do me a huge favor and share it? Send Send it to your partner, send it to your friend, send it to your family members. Anyone who's going to benefit from listening to this wise, sensible advice from two experienced professionals. And of course, in the meantime, don't forget to make sure you are subscribed and following this show so that you never miss a beat. In the meantime, keep learning, keep growing, and most importantly, keep your financial fire burning bright. I'll see you next Monday.